right, welcome everyone. Welcome once again to another fantastic Figure Sales Success webinar. As always, my name is Alex Nichols. I'm here with the Figure team, and today we have an exciting new feature for every single partner we're going to talk about. We have some new up-and-coming stuff I do want to demo and more. But before we begin, as always, here is Tim Rowan, our Senior Director of Sales Success. Tim, how are you doing today?
I'm excellent. Love having everyone on board as usual. It's funny for everyone that's on the call. It's actually been a great success, team, with the webinar every other Wednesday live. Typically, what's most impactful for these sessions, for any of you that are new, are right towards the end. We will spend as much time as we can with Q&A. So before we get there, though, and we have some game-changing announcements to make, I think you would all agree, but I want to make sure and just reintroduce to everybody our newest member to the team, Mr. Mike Orlando. So love having Mike here with us. And Reef, thank you for jumping on. I know we're all going from one meeting to the next type of deal. So here we are. But we do have some recent enhancements. And as usual, I want to try and set the stage or maybe create the right expectation. So what many of you may have already noticed, because it went live across the board, Alex team, keep me honest here, but linking to business accounts went live for all.
For everyone.
2 days ago? Was it 2 days ago?
Yes, 2 days ago. It was Monday,
At
5
5 p.m. Pacific Standard Time. That's right. Yeah, and if you call right now,
yeah, exactly. Get a sham. Wow.
Yeah. But here's the expectation I want to set. So I want to make sure we're all on the same page. So just to recap, and Alex is going to demonstrate this to you. Historically, we here at Figure, we love verifying income by linking to bank accounts through the Plaid system. Most all of our users, and with Figure or not, are very familiar with the Plaid system. So that is always our fastest path to verifying income. However, where we have punched holes in that, if you will, over the last several years, is understanding that we did not have the ability to link to business bank accounts. And however, we do now today. We actually think this is a significant change. So Alex is going to demo that.
I would say this is the biggest change we've ever made, Tim.
Yeah,
I would say this is not significant, right? This is the biggest
it's
thing to me.
pretty big, especially with our self-employed borrowers. I mean, that, if I'm being honest, that's not necessarily been a strength of something that we would shout from the rooftops, like send all your self-employed people here, right? However, I want to set the right expectation. And for all the loan originators that are on the call, it's important to compare what you may know as business bank statements versus what we're going to show you regarding linking to business bank accounts. Now, what's the difference? The difference is this: if I submit a loan as a loan originator, self-employed borrower, and I've got to go a business bank statement loan. Well, we all know the process. I'm going to gather up 12 to 24 months of physical bank statements. I'm going to package those up with my loan submission. I'm going to send them over to a lender, and in underwriting, they're going to review the deposits based on the type of business. They're going to adjust based on a business expense ratio factor. Okay. And every business has a slightly different business expense ratio. In our system, actually, let me back up. When that happens, you get something from an underwriter, you, the LO, saying, hey, we're applying a 50% expense ratio on this. And what do we do as LOs? We say, well, no, that's ridiculous. His business, it's not even 10%. And then what we're tasked with is going and getting a CPA letter from the borrower indicating what the expense ratio actually is. And then that lender typically will review that and go from there. We aren't going to do any of that. So Alex and team will show you the workflow, but there isn't going to be any, well, we don't agree with the expense ratio you're using, so please get us a CPA letter. Remember, the why behind that is, honestly, folks, I don't have anyone to review said CPA letter to verify an expense ratio. You see what I mean? So still digital, still very much a digital process through this. And what you'll see when Alex demonstrates this is we always, the rule is always have your borrower start by linking to their personal bank accounts. The system will then see their business bank accounts, and it'll verify a certain number here on their personal bank accounts. And then it will ask the borrower, we see you have business bank accounts, or would you like to link business bank accounts? The borrower will then select yes. They will then be taken to a page to answer some questions. Percentage of ownership of said business, what type of business it is. And Alex is going to demonstrate all this. Just know that whatever those numbers are is what they are. There's not going to be any, pushing back. We don't agree with the number. So far, I will tell you that we're already seeing some great success. Would you agree with that?
Oh, it's going incredible right now, and I think our whole team's seeing it, but just across the board, right? Just like everything, we've had this tested in our DTC channel first. That was great success, and now that all our partners have it, I'm pretty excited about it. But trust me on this, this is going to open up so many avenues for you all.
Yeah, so we're going to spend some time. We really want to dive into the business bank accounts because it is, of course, live for all of our partnership channels. The other thing that I want to tease a lot of you with here, if I dare, is we also have 2 more enhancements coming out. Some are live, depending on the partners, and some are not. So just know it's not across the board for everybody yet. But as an example, Mike, we rolled out a variable rate product.
Yes, we did.
Yeah.
Very exciting.
Yeah. So why would that be the case? Why would it be exciting? And I've talked to a few folks about this. And if you see it, by the way, you'll go in and do your inquiry as usual. And some of you may start to notice, oh, look at that. I don't have just a fixed option. I now have a variable option. And the question might come up, well, what homeowner would want a variable? Number one, keep in mind that traditionally that's what HELOCs are. That's where we've always differentiated ourselves, right? And furthermore, I think we could all agree, if I turn to the back here, I've got my crystal ball heading over here. It's very likely that the Fed will be in a trend of lowering rates. And as an example, that might be a strategy where your borrower may want the variable rate, understanding that it's very likely that that rate will come down, right? So just know that's pretty cool enhancement on its way, live for some and on its way for all, probably by month end, I would have to guess. So keep an eye on the newsletters, the webinars, of course, great places to get this information. And then, of course, this one surprised me a little bit, but we're also in the process of coming out with what we call a near prime, is what we've named it, product for lowering the FICO with a FICO band of 600 to 639. Now, some of you may see that also, and I will tell you that, honestly, I looked at it and go, well, how much is that going to work? In other words, there's delinquencies involved. Maybe that kicks it out. Maybe there's credit utilization that kicks it out. But I'm happy to report that I've actually seen already a couple of these close. One with a 602 FICO score. So
That's incredible.
Yeah, right? I mean, just know the opportunity's there. Pay attention in the lead portal. Always, always, always use the inquiry tool, and that is what we hold our ground on right there. Like, if you're wondering what an option might look like for a borrower, Reef, what's the answer? What should you do first?
You should probably do an inquiry.
do the inquiry. It's funny. I'll back up in time here a little bit. It was long before Mike was with us, but we were at a conference. Oh, it's been some months ago now. And I'll never forget, we only had about 10 minutes, 15 minutes on stage. Alex and I were up in front of the room, and we had one document, basically one PowerPoint slide, if you will. And really the message was this: hey, I wonder if my FICO is 700 and I think the value is this and this. Can you guys do a HELOC? Run an inquiry. Hey, my client lives over here. It's an investment property. Can we do a HELOC? Run an inquiry. That almost every question you ask should result in first run an inquiry. Would you guys agree with that?
Absolutely. And that's our big strength. In fact, I was just on a call right before this, and someone was asking me, hey, what's the difference between the Figure HELOC and, say, Rocket, for example? And to me, that's the starting point of any path you go down, is you're going to do an inquiry. Not only are you going to know if the Figure HELOC works, but it's going to give you information. So even if they don't have offers, you're going to have a FICO score, you're going to have an AVM appraisal document. That way it helps you strategize. So maybe it's a brand new borrower, someone you don't know, you don't have their background. Inquiry is going to help with that. So again, it's always
By
the
the way,
first place to go.
you just said something that just triggered another enhancement that we've had now for a minute, but now
Mhm.
we're going to improve it. But just to recap, make sure everyone's aware, we are now going to loan amounts beyond 400,000 with a max of 750,000 loan amounts. By the way, well, I will give you the loan originator mindset on that. And when I first saw product and engineers building and rolling this out, my initial thought was, oh my gosh, is there really a market for $750,000 HELOC loan amounts? The answer, absolutely yes. We
Mhm.
actually see a lot of these going on. And actually, Alex, maybe we don't need to necessarily dive into it today, but it is maybe another good topic for us regarding the borrower aspect of that workflow. Because
Yep.
when the loan amount, and by the way, this is not just the base loan amount, this is the loan amount including the origination fee. If it goes over 400, an appraisal is going to be required. And up until yesterday, the borrower would have been required to pay for said appraisal. But as we know, as of right now, that is no longer the case. It is no cost to the borrower to do an appraisal past 400,000. So that's
That's gonna
huge.
make it so easy to do those loans, Tim.
I know. It's hey, I'll take it. I think the perspective is let's treat this as a special. Like if you have borrowers that fit in that box now looking for the over 400,000, yeah, rock and roll with it. I don't know that that'll be the case forever, right? So
Mhm.
take advantage of it while we can. But in the meantime, topic at hand, business bank accounts. Notice I'm saying linking to business bank accounts, not submitting and reviewing bank statements. There is a clear difference there. I really want to drive that point home. So, Alex, let's take a look. And by the way, Alex, if we can look at it from both.
Oh, Tim, don't worry. I have a whole presentation for this. We're on a webinar, my
It's like
friend. I'm an extra human being.
it's like presentation Alex is engaged.
Yeah, my wife says I always do too much. And so with that, I've done too much. So let me go ahead.
I
I'm
need
going
a
to share
wife
my
that thinks
screen
I do
here.
too much.
So this here, first off, this slide deck is already available on the Resource Center. So if you were all curious and want to know more, you may have already seen it already. That Resource Center there on Lead Portal, I have added all my documentation, demo videos, all that fun stuff is in there for you. So some things I did want to talk about, right? And we are going to look at that borrower side as well. Don't worry, I'm a visual person. I like seeing it. Here's a couple really big things. And I want to reiterate what Tim was saying. This calculation, right, as you can see, acts as a proxy. What does that mean? Well, it's going to be looking at that linked business account. It's going to be doing those calculations specifically. It's going to be built. Oh, there we go. Okay. Don't know what happened there, but there we
Yeah,
go.
no, that's wild. Yeah, okay.
So one big thing I do want to bring up is again, and I'm going to hammer this point home. We have a wonderful operations team, right, of great people that can answer all your borrowers' questions on income verification, but they're not underwriters. We don't have underwriters at this company. So this is where your borrower is going to link their online account, just like they would, say, a personal checking account. And we're going to see that here in a second. And what it's going to do is it's going to do those calculations. Now, here's a fun thing. First and foremost, it's the same method as linking personal banking accounts, meaning these will stack. So if they have a personal bank account, let's say, and a business bank account, and they link both of them, well, we can take that income right together. However, we're going to try to verify the personal income first, see if that's enough to pass. Reason being is because we're going to make it as easy as possible on your borrower. You're going to see here in a second once I do the demo, for business bank accounts, we're going to need a little bit more information. So if they can, they link up a personal checking that verifies enough, we're not going to have them do the rigmarole of adding in the extra little bit of information, even if it is only a minute worth of time. So keep that in mind, right? It is a part of this whole process. They can do personal accounts, business accounts, multiple business accounts if they want to. The biggest thing I do want to bring up in this example, though, is the fact that it is at a minimum 680 FICO, right? Investment properties, secondary properties, those are already at a minimum of 680. However, I am guessing there are scenarios where a loan officer is going to do an inquiry, Tim. They're going to select primary property because it is their primary property. And then their borrower is going to get offers. But if FICO score is below 680, right? Because for a lot of our partners, we can go as low as 600, as you're saying. Double check, talk to the borrower. Because if their FICO is below 680 and they got offers, they can verify via all our different methods except for business accounts. Those require a minimum of 680. So go into the details, check, right? Do your due diligence, set the expectation with the borrower, see how that's going to go. I just wanted to make that big call out there.
No, that's a great point, Alex, and thank you for bringing that up. And I love that you're leaning into the expectation part. So, what we say all the time is the sooner we can set the expectation as to what the process is going to look and feel like for the borrower, the better off everyone will be. So,
and you don't want to say, all right, go to that page, link your business accounts. They get there and they can't.
FICO, yeah, right.
Yeah, exactly.
Yeah.
So what does that look like for the borrower? Well, let's take a look at it. So I'm going to go ahead and share my screen again. This is going to be the borrower's view. So this is the income verification page that the borrower is going to go through, right? And we got great docs and demo videos on this in the Resource Center if you want to review more. But if we're focusing on business accounts, that's going to go through that same option as personal bank account linking. So where that's going to go through our third party, Plaid. Fun fact, I used Plaid today to buy some hash, which is our company's crypto coin. So about $100 worth. So hopefully that pays off in the future. I'm sure it will. With Plaid, right? With Plaid, it has to go through one of these institutions, right? They can search for it. There's about 12,000 plus different institutions that Plaid supports, but keep in mind it has to link via Plaid. So for example, if I want to link up a Wells Fargo business account, let's say, that's just what I have in my demo, all they're going to have to do is click login. Now, I want to add on really quickly here, folks. Before we look at that business account linking, I want to reiterate, this is purely secure, in meaning when they log in, when they put in the username and password, that is going through their actual bank account. It's an API, it pulls up a pop-up window. So here with Wells Fargo, they would actually be logging into their Wells Fargo account and then giving Plaid permission to pull. We do not save the username and password. We don't even see it. We can't at all. So this is something where if I hit continue to log in, it'll pop up, I'll log into my account. And then once I log into my account, it'll say, great, go ahead and give Plaid permission. So Plaid's going to pull transaction history. It's going to pull account information, balances, so on and so forth. So once they allow that through Plaid, many of you may have already used it before. Awesome. There we go. Now, in this case, I've just linked up a Wells Fargo's business account. But again, to reiterate, they can link multiple accounts if they want to. So in this particular instance, it's saying, hey, to link that business account, we are going to need some more information. Now, in this demo example here, the reason you're seeing income is because it pulled some personal income off a different account. So, right. But what would happen here is it wouldn't verify income until they have added additional information. So you're going to see this alert here at the top. So we're going to hit add information, and that's where this additional step is going to come into play. They're going to need to put in how they file their tax returns, right? This isn't tax linking. That's a whole nother method. But this is saying, hey, we need the entity type. We need to know how you file. So this can be a sole proprietorship, partnership, S corp. So this is going to tell, I said that twice, but this is going to tell our system in that algorithm how to do those calcs, right? Meaning, hey, if it's a partnership, what's that ownership percentage, right? Sole proprietorship, what kind of business sector, that kind of thing. And this is going to help do that annualization, do that calculation, right? Everything in there. So they can either select the, tax form, put in the information it's requiring, or if they have that industry code, they can put that in as well. In that same slide deck on the Resource Center, I didn't show it, but we'll explain to you basically how to point your borrower in the right direction if they're unsure of how they filed. But this way we can say, okay, it's a sole proprietorship. Let's say I'm in real estate. I'm a real estate property manager, let's say in another life. Well, all they have to do is just put that in. They hit save and continue, and then it calculates it. Woo, verified, we're good to go. Life is good, life is happy. So keep in mind, it's just going to add on that additional step. Here's my big piece of advice for you. If the borrower has questions, if they need assistance, anything of that nature, well, there's a little chat button here at the bottom right. They click on that chat button, what's going to happen is they're going to have a little pop-up where they can talk to one of our agents. We're open every day, including weekends. So there's a little AI built in if they want a quick answer, or they can talk to a real human in a couple minutes there. That real human can give them guidance, advice, do screen shares. Just keep in mind, because of income verification is secure, the screen share is going to block all their account information, right? We don't want to leak that. But number two, again, we're not going to discuss the calculations. It is simply agents are there to help them link those accounts. And then whatever it verifies, that's what we're going to go with. All right, that was my extra presentation, Tim.
Yeah, so actually one little thing I want to add to that, which is really cool. So again, always stress they should start by linking their personal accounts. Now, for a lot of borrowers, they are one and the same. They're using the same banking institution for both their personal checking and savings as well as business checking accounts, which that's fine. But always have the borrower start with personal. And this is what I think is pretty cool. Let's say the borrower, you say the borrower's making 200,000 a year, and they
Mhm.
link to their personal bank accounts, and it comes up and it only verified 20,000 a year. But then it will ask the question, hey, we see business accounts. Would you like to link those? Just like what Alex showed. Yes is the answer. Okay, great. Well, then the business bank accounts end up giving 180,000. Now we've got to our 200, the 180 on top of the 20. So I love the fact that we're stacking those two, as long as it bank statement source, right? You can't stack income from bank accounts to then stacking, pay stubs on top of that. It has to all be the same income verification source in order for those income numbers to stack.
And that's, I think, going to help so many. I mean, we're already seeing so many people get help with that. But again, I've been with this company over 5 years, folks. This was always the big sticking point with this product for self-employed individuals. Really, it was a product that worked great for W-2, but self-employed, I'd say, it just depends on how they, get their income. This is going to open up such a massive avenue that I feel like it's going to be its own almost market there in my mind.
Yeah, well, historically, what's happened is more times than not, we would need to, because we couldn't link to business bank accounts, excuse me, we would advise have the borrower link to their tax transcripts. Well, so many times self-employed borrowers actually file extensions, and we only use the most recent required year. We don't default to the previous year. And that's good news, bad news. We don't, a lot of self-employed borrowers are held to a 2-year average, or Lord forbid, a declining income number. And we don't. We're only going to use the most recent required tax filing year. However, yeah, go ahead, Alex.
I want to step in there because that's actually a new enhancement that also went live. We can take, for self-employed borrowers, 2 years of tax returns. Just keep in mind, they have to have filed this most recent tax year. So if it works out better for them, they can link both years. And we just added that also as well. So this,
you know what else,
keeps
actually,
getting better
Alex,
and
thank
better.
you. I did just see that, and you're right. Thank you for the reminder on that. And I will say that that's something else that a lot of loan originators don't realize is that in our system, a borrower, and Reef, actually, I'm going to have you talk to this, but here's the statement I'll make. A borrower could choose every single income verification method we have. Is that accurate, Reef?
Yeah, they can.
And of those, what number are we going to use?
The one that verifies the highest.
That's right.
There's
And by the way, this is very different than the traditional lending industry. We all know as loan originators over the years that if I submit a pay stub and it shows a guy, making 90,000 a month, and then they link, or I submit the tax returns and it shows, sorry, he only makes 50,000 a month. Well, then guess what number they're going to hold us to, right? So I love the fact that our borrowers, your borrowers, can use every income verification method, and our system will use whichever is the highest.
Yeah, I have an example actually for that will be insightful, I think, for many on the call. There was a scenario where the loan officer had a self-employed borrower and they tried linking personal bank accounts. This is before we had business accounts, so it'll probably be a little different now. But they tried to link their personal bank accounts. It verified nothing, right? The deposits weren't qualifying. So the LO said, well, this product doesn't work for my borrower. This isn't for self-employed folks. And I said, well, have you linked their taxes? And they said, well, no, because their taxes don't show that much income. I'm like, well, how much income do you think it shows? Well, it might show maybe 50,000, 70,000, but it's not enough to get them what they needed. And I was like, let's just link the taxes. Let's just do that. And let's just see what happens, because there's no harm, no foul, right? So they linked the taxes. They verified 60-ish thousand dollars. It was enough for the offers that they were looking for, that basically gave them a counter offer, right? They didn't get their max offers, but they got enough money to where it worked for what their needs were. So that's a deal where an LO could have, basically not provided this option to their borrowers. So yes, please have them exhaust all their options. There's no punishment. It's traditional mortgage. You're kind of you're almost think of it like you're like an attorney, right? You don't want to show too much evidence to the judge because the underwriter, the judge, might punish you for showing too much. Well,
A
in our
judge.
case, you don't have that. You do not have that. So feel free to have them link everything.
I love that. The judge. I that's
judge.
that's funny. Anyway, we're pretty excited about this enhancement. And again, just to reiterate, the linking to business accounts is live across the board. So now, by the way, just in case anyone's thinking or asking the question, it won't be, you might have to start a new file. If you've got one currently that's stuck in income verification and it started 3 days ago, you probably have to just cancel and start a new inquiry because it's not, the logic won't be built in. And hold me to that, Alex. Is that a fair
Yeah,
statement?
and I was just thinking as you're saying. So if you're on this call, you got it, access to it. But again, if your borrower's app started anytime before Monday, 5 p.m. Pacific Standard Time, right? Just know for them to reapply with those applications, they're gonna have to contact our operations team. And one thing I want to add on there, just because I've seen it a lot, Tim, is if a borrower asks to cancel their application to restart via chat, tell them to expect, right, to confirm it. Because a lot of times they'll chat in, say, hey, cancel my application, and then they'll close the tab. Just per all of those fund rules, we have to verify and complete with them. So just tell them, hey, stay on, make sure that it's complete and you've confirmed. And then you as the LO can go in, start that new inquiry, which starts a new app, which is going to have that new logic in there for business bank account linking.
Very, very cool. We're running low on questions today.
Yeah, I was going to say, folks, feel free to post questions there in the chat. I'm also reviewing here on LinkedIn if any of you have any questions. So just please let us know.
Ooh,
It looks like
Jeffrey has
Jeffrey is raising his
raised
hand.
his hand. He doesn't want to just type it. He wants to ask it. I love it.
Let's go ahead and Jeffrey, you should be allowed now to unmute yourself and speak. So feel free to ask your question, my friend.
No, I was just playing around. It was my mistake.
There you go. No
Well,
worries
welcome
at
aboard,
all.
Jeffrey.
All righty, folks. Let's see what else is going on in here.
Do you want to bump Jeffrey off the screen,
Ooh.
Alex?
Oh, he should be bumped off.
It doesn't matter. It's okay.
This could mean that we're doing such a good job of explaining things, and people that are coming to our webinars are getting so self-sufficient and understanding how to use the product and the process. Questions are just getting smaller and smaller, you know?
Yeah, well, now that you said that, we're going to be flooded with questions. So
Yeah, I
thanks,
know.
thanks
Prove
for
'em
that.
wrong. We have Reef Wilson and Mike Orlando in our email box. Of course, people aren't asking questions. You guys have helped them fully.
Yeah. Mike, what's the first question? Can you see it there? Do you mind reading it out for us here?
Yeah, in the Q&A, we have my borrower couldn't get his bank account to link even though it was in your dropdown. Banner Bank, how we fix this?
So, well, one, it's important to note that the Plaid system is, yes, they're getting to it from us, but it's not us, right? The Plaid system is used
Right.
across banking institutions across the country, of course. I don't know how to direct somebody on this, but I can say I've heard some feedback that when that's been the case, it's very likely that the borrower in their bank institution has to indicate that it's okay for them to link to third-party sources. Does any of you guys have any feedback on that?
Yeah, you might just want to call your bank and see if they're allowing it for your account and make sure they don't have any kind of, any kind of blocks on it for security purposes.
Yeah, because if it shows up as a vendor of Plaids, then in theory it should be working fine. There's nothing on our end that we do to prevent that. And again, I think the answer there might actually be at their bank's level. And sometimes when a borrower logs into their bank account online, they might find a button to toggle, if you will, that yes, okay to, verify through third-party services.
And that's another good point too, right, folks? If it is on Plaid's list and they're having difficulties, I usually just say exactly what Tim said, because there are some institutions where in your account settings, you have to toggle on to allow third parties to access. So I've talked to a lot of borrowers in my time to just point them, hey, depends on the institution. I don't know where it is, but it is something to check on. They can always call that bank's customer support. Also, Plaid does allow multi-factor authentication. If for any reason there's any issues, they can just turn that off for a moment and turn it back on. So just some advice.
All right, another question, not regarding self-employment, but how does the system pick up income from rental income from bank statements? And are Zelle deposits okay?
The quick answer is no. And I'll try and shed some light on that. So rental income coming into bank accounts and for the system to verify it as an income source can be tricky. And here's what I mean by that. There's a good chance that the system will pick it up and use it if, in fact, the source of rental deposits is coming from, let's say, a property management company. It's the same amount. The deposits are on the same time every month. So the cadence and consistency and source of said rental deposits is the same. Well, that takes us then to the end of the question, which is Zelle okay? That's where it disconnects, because Zelle is most likely not going to be the same day, same amount, same source. There's no way to know truthfully what the source of that deposit is outside of Zelle. So that can be a tough one there. So it's important, the power of questions, right? So if a borrower says, well, I'm collecting $5,000 a month in rent, great. How are you collecting it? Is it being deposited from a property management company? And if so, I'd give it a whirl. If they say, sometimes it's my brother-in-law and he pays me with Venmo one month and Zelle the next, and then I have a PayPal account over here, most likely not going to pick that up.
Do you have to be licensed in each state? Is the next
do.
one.
You do. Loan originator license, and of course your company has to also be licensed. Pretty standard business as usual there.
All right, and does the business need to be verified to exist for 2 years?
Ooh, great question. Reef, might you know off the top of your, I don't believe we asked that question.
No, it needs at least 180 days transaction history. Reef, I don't know if you have more information on that, but that's all I'm aware of.
Yeah, they don't need 2 years.
Yeah, I don't even believe it's a question we ask. But
And
the good news
also-
on the bank accounts, though, Alex, I hadn't caught that.
And about being licensed in the state, it depends actually on your partnership model too, because if you're maybe retail correspondent, you as the LO might not have to be licensed in that state, but if it's like wholesale, for example, then yes. So just check with your partnership.
Yeah, the difference there, Reef, is even in that retail correspondent space, they wouldn't be the LO on the file.
They would not, but they could still originate through their
default LO, and yeah.
Correct. So just check.
And if business tax returns are not filed through a provider, is the IRS connection the only way? And have we fixed the TD Bank and Capital One business checking verify income? That might lead back to what we were talking about before. But the first part of the question, business tax returns are not filed through a provider. Is the IRS connection the only way to connect it?
That's the best way. So even if they're using a tax preparer, you don't want to actually use that option if you can avoid it. IRS.gov works for everyone, right? Whether you're using a provider, you're doing it yourself, whatever the case is. So definitely IRS.gov is your default there.
Yeah, and what's interesting about that, and we've had some conversations. In fact, I think on our YouTube channel, we probably have a whole segment on this, self-employed business, verifying business income. What's interesting is the IRS.gov is, to Reef's point, a great path. However, again, the power of questions, if that's the route you're going to go or help instruct your borrower with, then they need to know, do they already have an account there? And if not, they'll need to go onto irs.gov and create an account, which is actually called an ID.me account. So it can be a little confusing for borrowers if they don't already have that. And Alex, keep me honest here. I think we do have a tutorial on that on our YouTube channel, I think.
Yeah, there's a tutorial, as well as when the borrower goes to link their IRS like taxes, there is actually instructions in there on how to create the account. So to your point, Tim, I had to do this, so many years ago, the ID me thing. It took a little bit of time because you have to, take a photo of your ID, make the whole account, verify. But just know we have instructions out there for the borrower.
Yeah, and by the way, that's also another example of when a borrower does go and create an irs.gov/id.me account. it won't work the same day. It takes like 24 hours or something. And I think they also have a button that you toggle to indicate, yes, it's okay to verify with third parties. You know,
Correct.
so just so you know, and again, we have some tutorial stuff on that. Oh, and then Reef, let's dive in. I'm trying to decipher the last part of the question. And have we fixed the TD Bank and Capital One business checking?
Yeah, great. So traditionally, we've had some issues with linking with some providers. Fidelity is one that pops up in my mind. So Fidelity had connection and connectivity issues. We've since resolved that. In terms of business checking, well, we just launched business accounts like a day ago, maybe 2 days ago. So maybe in the past, you can feel free to rewrite that question if you like, AL. But in the past, it would not work. Right. So no matter what bank it was, it doesn't matter if it's
True.
TD, Capital One, whoever, business accounts just do not work. Today they do, and I believe Plaid is compatible with TD and Capital One. So try it again. You might see a different result.
Love it.
All right, questions are really coming in now. When a client uses the chat button to cancel, what other proactive advice should I give the borrower other than to just stay on to confirm? Is there anything else that they should be doing?
Oh, good question.
It
So,
is a good question. Actually, let me jump in here real quick, Alex, then I'll let you take the balance of it. So I want to clarify if a borrower chats in to cancel. This has actually come up recently. So I want to make sure to as best I can clear up any confusion here. We launched a while back now, and you guys can tell me exactly how long ago, but it used to be that if a borrower's name was missing a suffix, or if you typed in Joe and it ends up being Joseph, it used to be that was a full cancel and reapply. Today, if things like name change, ownership type, they put joint, but in fact it's in a trust, those things can all be handled with the chat, and it's not a true cancel and reapply. It is what we call a modify and restart. Here's the good news about that. A modify restart, our team behind the scenes actually makes the corrections, which is actually in a new file, and then sends that link to the borrower. Everything that they did on the previous file basically fast forwards and dumps into the new one. Versus a cancel reapply is fully canceled, and then the loan originator, if using the inquiry tool, has to start with a brand new inquiry. So we've improved that a little bit. Now, to directly answer the question, and Alex mentioned this earlier, we have seen it where a borrower will go onto the chat, they'll open up the chat and say, please cancel file, and then they log off without anyone ever having responded to the chat. And the request, of course, didn't go anywhere. So yes, the borrower does need to stay on the chat. And we're only talking a couple minutes here, by the way. They're very quick response times on the chat. So make sure, set the expectation with the borrower, should that happen, to stay on the chat until whatever requests being made has been confirmed.
All right. So understand that we use household income, but I will change that to spousal income, not just household, for qualification purposes. If the wife doesn't work, but has excellent credit scores, can I apply only under her name?
Reef, I'm going to have you take
Assuming
this
they're in
one.
a
I know what my
community
answer
property
is. I want to hear
state,
what Reed's answer is on this.
Sure. Just put me on the spot. No problem. No.
Go ahead, answer
What
it.
we do.
Yeah. So if, in theory, right, if the spouse does not work at all, right, and they have no job, depending on the state, you might still be able to use them as the primary applicant. Okay. Some states do not allow you to actually use that person because they make $0 in income, even if it's community property, even if it's homestead. That said, right, if they make any money, let's say they make $20, $50, $100, $1,000, right? They make anything at all, you can then use that and then add their spouse's income, right? So I'm not going to be here giving legal advice or financial advice or anything along those lines, but you as the advisor, right? If you understand that let's say in that scenario, one spouse makes $1,000, the other spouse makes $400,000. Well, go ahead and put $401,000 in that box, and you're good to go. That's how I would frame it.
Here to be the scenario that I'll tie this down with. Let's say you have a borrower that we're saying is unemployed. To be clear, if you go in and do an inquiry and you put employment type as unemployed, you're not going to get an offer.
Exactly.
Those are the one loans we won't do. However, what if said unemployed borrower is retired and you choose retired, and yet the spouse does still work and does make Reef's $400,000 a year he threw out there? Then yes, that person could be the primary borrower. But how you indicate their current employment status, retired, employed, self-employed, that is important, because if you indicate unemployed, then no, we're not going to do it. Is that fair?
We're not lending to unemployed folks currently.
Mhm.
That could change, but, today.
So how does comp work?
Okay, so probably a response we should take offline individually, understanding where what partner you work with, where your license is hung with. But outside of a few very special products that we're working on, everything, I'll just say it this way, everything is lender paid compensation, regardless of the origination fee that you see when running an inquiry. Everything is lender paid compensation, regardless of the O fee that you choose, regardless of the loan amount. It doesn't matter. And so we have there are different comp arrangements and levels made with each of our partners. So just reach out to us and we can have that conversation one-on-one.
Mm-hmm. Let's see here. Might need to take this one offline. Let me actually read the question first before I do that. Let me see. Back to rental income. Can they link IRS to show rental income via tax returns and provide pay stubs and W-2s for their employment income?
Can they link IRS to show rental income via tax returns and provide pay stubs and W-2s? No.
Mhm. And let me expand on that too, Tim. Keep in mind, folks, the different methods don't stack. That's the big thing, right? So business accounts are the same method as personal checking accounts, let's say. So those can stack. But if they link up taxes, we'll take the highest out of the two of those. So have a conversation with the borrower, see how they get their income. They just can't scattershot all the different methods because we're only going to take the highest.
Yeah, can they use all those options? Yeah, right. If they're W-2, you can provide your pay stub for sure. If you have taxes, you can link up your taxes, no problem. You have bank accounts, you can link your bank accounts. The system will take the highest of all of those, right?
Right. But what it's not going to take is the income from a pay stub and add it to the income on a tax transcript.
Right.
Exactly.
Income options are buckets. Okay. So if you link 4 different bank accounts, those will sum together because that's all in the income verification option of bank accounts. So that's a bucket. And then you have taxes, that's a different bucket. You have pay stubs, that's another bucket. Those buckets don't sum to each other.
Great summary, Reeve.
Let's see. All right. For investment properties, can title be held in an LLC?
Right now, today, no.
Okay.
Not for the traditional HELOC. If you have DSCR, you might be able to do this.
Very few do, but we are building it. We are testing it. We are rolling it out as best we can. Kind of baby steps, kind of crawl, walk, run on DSCR. But yes, we are accepting LLCs and DSCR if you have it.
And do we allow power of attorney for closing?
We do not.
Right. Just, we always do this, but of course, we're going to be sending a recording for this call, correct?
That is correct.
All right, that was an easy one. Knock
It's
that
going to be
one
on
out.
YouTube, folks.
Business as usual, but
Yep.
Alex does send it out to all attendees.
Okay.
Click that subscribe button, ring that bell.
Yeah. Primary residence, husband, wife, and mother-in-law reside in a household. Mom is disabled and is provided with care in the home by the husband's wife. Can I include Social Security income received by the mother-in-law in the annual household income?
Mike touched on this. You touched on this earlier, and by the way, I was pleased to hear you so quickly respond to it and change the verbiage. But remember, it's not household income; it's spousal income.
Mm-hmm.
I want to be really clear on that. So it's not household income. So in that scenario, no, you can't, bring all those incomes into the factor. If they were married, spouses, yes, we could use it.
Yeah, because otherwise we'd be taking if kids had summer jobs and that type of thing, right? Just piling on paychecks. So yeah, it is spousal income that's included. I want to use the wife only for the HELOC, but the mortgage history is not under her credit report. It's under the husband's. Wife is on the title. Can this be done?
Yeah.
So
Yes.
Yeah, we
yeah,
don't care. We don't care who's on mortgage. We don't that has
Yeah,
nothing to do with
she's on
profitability.
title, so
We don't
Yeah,
care.
well, it's interesting because I think what it comes down to is would they actually get an offer if in fact the existing mortgage is not under the wife's credit report? Yes, and the reason is because we'll see it in lien match logic that we'll still find on that property the mortgage, regardless of whether or not it's pulled up on a credit report.
Mm-hmm.
right. How far back is the look back for bank statements for W-2 income? 180 days or a full year? How far back do we go?
Pop
Reeve?
quiz, Tim.
At least 90 days. At least 90 days. So it's I think 86 is their true number. That's the minimum, but we could look back a year.
Yeah, if it has a full 12 months of activity, then we're going to annualize it. If it has less, then to Reeve's point, that is okay. But if it has a year or more, we're going to go by that 12-month period for the annualization.
Great response, Alex. Thank you.
All right, and last one listed so far, do assets help or is it ever asked?
Assets do help. And so let's walk through that process here for a second. Your borrower goes in and they link to their bank accounts, and it only verified a small amount of the income that we all stated. And it will take the borrower to an additional screen to adjust their income. They'll be asked, is this in fact your income, your annual income? And then it will give them the option to link additional assets because our system will give asset depletion for income. Now, we don't see it a lot, but it will and can happen.
Okay. One more. Is there marketing available for this product? I'm not sure if we're talking about the business, the business checking
I
accounts
think
or
probably just in general.
just in general.
And Alex, in our resource center, do we know where we're at as far as some of the marketing collateral in there?
The marketing collateral, so there is a marketing toolkit in the lead portal. Keep in mind, we are updating it currently. We've made a lot of great enhancements recently. So some of those flyers and such reflect some older versions of the HELOC. But just know you're in there. You can download those PDFs, change them all you like. There's some great resources for email templates, like web templates, things of that nature. So really check out that resource center, right? It's not just some documents Alex made. Our marketing team also got in there, made some really good content for you all to really advertise with this.
All right, and can the LO submit the application for the client?
So I want to clarify this question here for a little bit. One, we will always be in favor of the LO starting the entire transaction, again, with the use of the lead portal and inquiry tool. Now, is that actually a full application? No. Depending on where you are, meaning what company you're with, some of our retail correspondent partners, they have a direct link that they don't need to do the inquiry. If they wanted to, they could just email that link out to the borrower and the borrower can go A to Z all on their own. We will always lean heavily on, especially if it's one of your past clients, using the inquiry tool to begin the application. But as far as the pieces that the borrower logs in and does, you cannot do that for the borrower. For, I hope, pretty obvious reasons, right? The borrower has to be engaged working on that.
And one thing I want to add on there, just because it came up today, Tim, is the fact that we check for things like IP addresses, right? We have synthetic scores when it comes to, emails linked, all that stuff. So absolutely help your borrower. Some loan officers will sit down with them, do screen share, or just give them advice. Just don't do it for them. It really will throw a wrench in the works.
Right. What is the asset depletion period?
I don't know that I know that off the top of my head. Reeve or Alex, do you know?
There's no period because we go off of balance, right? We don't care about distributions as far as assets. So we're looking at the balance of those accounts. So you really, by default, should be entering asset balances for every single borrower, whether they're 21 or 81 years old, right? Because we're looking at that balance. We're going to asset deplete and amortize that out over 10, 15, 20, 30 years and give them income credit. So,
by the way, I have seen that, to your point, Reef. I have seen that on a file here and there where someone links to their asset accounts for asset depletion income and it counters their offer down to, let's say, a 10-year. And the reason why is because the assets that we used would only last 10 years. So
Exactly. But it's always a net benefit, right? We're never going to punish. Remember, like, this is not traditional mortgage. You don't have to worry about, not showing everything. So it will always be a net positive for any borrower. So you should always add it.
Are there a maximum amount of bank accounts that can be linked for review?
Not that I know of.
No, they're not. But hey, if you're the first one to break our system because you linked 100 accounts, we'll get you something nice.
Let's see here. In North Carolina, are you able to refi an existing HELOC?
yeah. Well, are there any restrictions that you guys are aware of? And
Not that,
Not for
let
North
me
Carolina.
actually,
I mean,
that's a really
Texas
good pop quiz
Texas
for
has-
Alex.
Texas for
yeah.
sure, yeah.
Texas for sure. So, no, I mean, it's not really a refi through us though, right? I mean, they can pay off with like IntelliDebt, they can pay off that existing HELOC, right? And especially since we're coming out with the fund variable rate, there might be some eligibility in there. Let me just check one quick thing here because that actually is a fantastic question to be asking.
I do have an answer for you guys.
Oh, go ahead,
oh,
Reef.
go for it.
So for existing liens that you're trying to pay off, currently North Carolina is not one of the ones we can do.
Okay,
So
so it is.
That's
don't,
exactly what I was
don't
looking
ask
for.
me
Perfect. Thank you, Reef.
why. Don't ask me the why.
Yeah, so it is a state thing. Okay.
Let me post the state list here in the chat for everyone because there's a couple more states where that's unavailable. So I'll put that right there in the chat in case you're curious.
Right.
There are some state limitations for that.
Go ahead, Mike.
Okay, yeah. And can a client request a fixed rate?
Okay, this is a great question. So one, Alexander is asking a question. So Alexander, please be sure to grab some time with our team. Actually, Mike, maybe make a note, write the name
Mhm.
down, and maybe we can reach out to Alexander, see who
Yep.
he's with, because we want to help you with this, Alexander. So first and foremost, up until this week, all of our products are fixed. There is no choice but fixed and fully amortizing. Now that doesn't mean so it's fixed and looks and feels like a HELOC on one end, fully amortizing payment, full draw at close. However, it looks and feels like a HELOC on the subsequent redraw aspect, and each of our loan terms have different redraw periods. And so everything we do is fixed up until the fact that we're rolling out this variable rate. So, and same individual says, I have multiple lenders, so I'd love to have control of getting the application. Alex, I think what you're really referring to is, in fact, the ability to control day one for your borrower. And that's absolutely where the inquiry tool comes in, and we'll help you with that. So, Mike, make a little note. Maybe we can reach out and see who Alexander is with and help him get going.
Absolutely.
And our email is in the chat, right? So if you shoot us an email, we will set up time with you. We'll send out Calendly. I think Mike also sent that in there.
Yeah, Calling links in there too.
You can schedule directly.
Alrighty, folks, and I think that is all the questions. So that is everything we have. So thank you all for joining us. Thank you all on LinkedIn who are currently watching us. I'm going to be sending out an email that is going to have a bunch of information on what we just shared. That same information is going to be found in the Resource Center, as well as I'm going to put this recording on our YouTube. So I'll send you a link to our YouTube channel. Subscribe so you never miss a video, of course, as well as we are going to be here again in another 2 weeks. So we might have some great news for you in regards to those enhancements we were talking about. But with that, Tim, you want to go ahead and send us off?
Yeah, guys, everyone, thank you for attending. Mike, again, welcome aboard. Thank you for helping drive the Q&A today. Hopefully everyone sees some value in this presentation. A few comments made there surrounding that topic. So thank you again. And listen, I just can't stress enough. Make sure you're paying attention to our newsletters that are going out once a month. Make sure you're attending the webinars. Those are the two places where we really highlight any recent enhancements. And boy, we are rocking and rolling with some recent enhancements. So it's keeping the team pretty busy, and we're happy to do it. So stay engaged. We'll help at whatever level we can. And other than that, everyone have a great rest of your week.